Today I'm going to be talking about the 5 things that are killing and or ruining your trading. This may be why you're not profitable. These are systems and tactics that you need to have implemented inside of your trading system. On this channel, I've pretty much only gone over psychology. I've been dropping bombs with psychology videos, so if you have not watched any of those, I would very much recommend that you go check them out on my channel. But today, I'm going to be diving deeper into the technical side, helping you guys with your mental, psychological, and technical trading systems so you are able to tighten up and maybe start seeing some more payouts and seeing more consistency. With that being said, I'm going to move over to my monitor and my webcam and dive right into it. So, the 5 things that are killing your trading. Let's get right into it. So, number one is going to be you are not trading with the overall market sentiment. And what I mean by that is sometimes the market is going to be consolidating on the 1 hour, 4 hour daily. Sometimes we're going to be ranging. Sometimes we are going to be completely pumping and dumping with strong volume. And this is going to indicate what type of setups and what critique or what tweaks you should be making to your trading strategy. So our first example here is going to be a consolidation range. Obviously, we are playing highs and lows, and we are not going to be sweeping any external highs or lows. So we want to play the higher time frame consolidation. What I mean by that is we should be shorting inside of premium of the range, and we should be longing inside of discount of the range. And why is this important to know? Because if we look at the example to the right of it, our event-based markets, we are strictly pumping. We should never be shorting inside of a event-based market. So if we have the strategy of shorting inside of premium and consolidation, and we carry that over to an event-based market and we're shorting inside of premium in an event-based market, but remember, an event-based market is always going to be in premium, then we're going to lose. We should only be longing inside of an event-based market because the overall sentiment is bullish. In a ranging market, you can dabble with both, but I'd say 80% of your trades should be longs. Again, it's all situational, but very minimally should you be going short, and you should only be going short in a ranging market if you are seeing price breach an area where you expect price to manipulate, and you can very well see a reversal and you have that middle time frame confirmation. What I mean by middle time frame confirmation is going to be a 15-minute market structure shift to the downside, or maybe you have a strong draw on liquidity and volume is only headed towards the lows. That's the sort of situation that I mean. And remember, it all bases scenario to scenario, but having this higher time frame model, this higher time frame range, this higher time frame whole sentiment in line and aligning it with your middle time frame model and your 1 minute time frame entry, you are going to be much more efficient inside of the markets. I'm going to go on the charts and show you guys some examples now. So we can see here on the 4 hour time frame, what are we doing? We're consolidating. We are not taking out many highs. We are not taking out many lows. We're simply just bouncing, supply and demand. So we are not aiming to see external highs or lows swept, just internal. But if we do sweep, then that can make the setup even better if it is not a breakout. It's important to wait for confirmation in this sort of scenario. We want to play supply and demand levels and then reversals, short and premium, long and discount. Remember, like I said, be more strict on your setups in this phase because, again, probability is going to be lower if the higher time frame is consolidating. The simple reversal setups, weakness, MSS, IFEG, FEG, displacement is going to be the best confirmation pieces. Dropping down to a 15-minute time frame, what can we see here? We have order buildup. And remember, we are in premium of the range on the 4 hour. We are very high up in the range, so my only bias in narrative should be to go short. So on the 15-minute here, what do we see? Consolidation, right? Order buildup. This is where retail traders are taking their positions. And then we get a sweep of a high out of market open. So what am I going to want to see next? If I'm bearish, I'm going to want to see a market structure shift to the downside, in which we do, in which we can very cleanly take short off of EMA and inside of the bearish fair value gap. And we can use standard deviation 2 to 2.5 to figure out our take profit level, which is going to be this range right here. So I'm going to slap my take profit either here at 2 or in the middle at consequent encroachment of 2 to 2.5, but I would prefer just to play 2. This is a prime example of what a consolidation setup should look like. Now we are looking at an event-based market, meaning pump or dump, strong volume in one direction. We can see here on the 4 hour, we are just completely pumping, very little pullback. And the best way to play these is when the volume is extremely bullish. We're going to want to play into the volume. Remember, we're not going to be shorting in premium of the range like we are with consolidation sentiments. This is not a sentiment. You want to play reversals. PO3 is a very solid setup here if pre-market is dry. Higher time frame plus PD array on the higher time frame is going to be your strongest model here. So let's drop down to a 15. Let's see what we have. We can see here 845, just kind of consolidating in the pre-market. We get a manipulation move, even stronger if we SMT. We have very little volume, so we'd have to wait till open for our entry. Let's see what we can get here. I'm way too far back. So yes, expansion right out of open. It does kind of look a little bit dry. We do come down and we do remanipulate these lows, which is even stronger, and again would be even stronger with ES. I'll be looking to get in after the market structure shift, which is going to be this level right here. I'd want to see displacement past it. Anywhere in this general range, we could be looking for longs. Again, it does look pretty dry, but price does kind of clear up. We were pretty low volume today on this day, but any entry after the market structure shift would be a good play here. So inside of a ranging market, which is going to be a slower uptrend, for example, these are going to be the markets that equilibrium is going to get tapped a lot. The market is going to be a balanced market because we are slowly uptrending. Volume is not too strong to the upside. So I move back to equilibrium, and to rebalance is always necessary. I like to see a move out of either the 15-minute EQ or anything higher than that. Sometimes sweep of sell side if it's necessary in tired markets. PO3 is going to be the best overall strategy here. So looking here at the 4 hour, we can see we are slowly uptrending, not doing anything crazy. We can see we leave behind this 4 hour fair value gap, and we have our range high to low, and equilibrium is right here in the middle in alignment with consequent encroachment of this 4 hour fair value gap. Dropping down to the lower time frame, we can see we kind of have this accumulation range. Volume dies down. Looks like we get a manipulation move into 0.5 of the range, in which we tap to a T, and dropping down to our 1 minute, trying to frame our actual entry model. I'm going to want to wait for a market structure shift. In this scenario, I'd want to see displacement past this level, in which we don't get. So then I'm going to want to see displacement past this level right here, in which we do get, and then we can enter inside of some sort of fair value gap, whether that be this first fair value gap or the second fair value gap and discount on the range. Let's just throw our marker right here, and then we could just target our range highs, in which would then get hit relatively quick. This would be a bad example because it is 5:40 in the morning when TP gets hit, but it explains my point. Moving on, our number 2 spot is going to be you are stuck on your bias and do not have an if and or then scenario. So what I mean by that is we go into the markets and we have a bias and we have a narrative. Our brain is then engineering itself to think in a pattern of what we want to see and acting off of what we want to see rather than playing the market for what it is showcasing. So I'm not an advocate of having a stuck bias and only trading that bias. I am more of an advocate for just playing the market, taking what it gives you, and then running with it. Let me go into a chart and show you guys an example. So this week, actually on Wednesday, I was very bullish going into the morning because I wanted to see a manipulation. I wanted to see a continuation of our previous uptrend on the middle time frame. I did not get that. I had an if and then scenario set in place though, meaning if we were to displace past this low right here and not show any form of reversal, then I was going to switch my bias from bullish to bearish, and look at exactly what happened. Price just kept dumping down past. Eventually, we got oversold on the relative strength index. So this just alerted me we are probably going to make a rebalance move up. Don't fall for the longs. Don't be so bullish now just because we're reversing. And then I wanted to see a breach of OTE and a breach of this fair value gap as well. I wanted to see this get rebalanced into, in which it did. We also manipulated this internal high as well, marking out OTE from 930 open to the low. we had OTE. So what did I do was I took a short after we inversed this fair value gap, and I hit on the recent low. So this is a prime example of what I mean, if and then scenario. If this happens, then my scenario is going to change to this. Then my bias is going to change to that. This is how I'm able to frame models even when my bias is wrong. The next one on our list, number 3, is going to be you do not have a middle time frame model. What do I mean by that? Well, everybody is so stuck on the lower time frames. Everybody is so stuck looking at the 1 minute, the 30-second, the 2 and the 3 minute, but they don't really realize that whatever trading strategy that they're trading on those lower time frames is not a trading strategy. It's not a trading model. It's an entry model. It's a way for you to manage risk, a way for you to get an entry and be able to get in at such a precise spot so you are able to have a small stop loss in an area where you can frame your model, and it should be based off of a middle time frame. Your middle time frame is what's going to confirm to you that price is actually going to go to the draw on liquidity right now. Your entry model is just your point of entry. You need an entry model strategy, in which I'm going to go over. Then you're going to need a middle time frame model to tie to your entry time frame strategy, or your entry model 1 minute time frame strategy. So let's go into the charts and I'll show you guys an example. So looking here at a 15-minute time frame, this is what my prime middle time frame is going to look like. This is where I'm going to frame most of my models. Again, this is going to tell me where price is going to go. What do we have here? We have a consolidation range where orders are just simply building up and nothing is really happening. On the 15-minute, we get a breach of sell side liquidity and or a breach of the accumulation range low. Now, from this point on, I am looking to go long after a market structure shift. So dropping down to a lower time frame. Again, I need the market structure shift because that's the only thing that's telling me we are going from a manipulation to a distribution phase, in which this is exactly what we get right here. Our market structure shift level is going to be right here. We get a nice close above, and then we get a pullback directly into the fair value gap, in which I'm looking to frame my entry. I'll take entry here, stops in this general area, and then I'm going to want to play the market maker buy model back to the upside. So I would then want to play this level as my take profit because it's the next level of low resistance liquidity, and bang, that would hit. This is actually a trade I did end up taking in real life as well. Moving on to our number 4, which is you do not have a micro time frame model. What do I mean by micro time frame model? I mean an entry model where you are framing out that precise point of entry. So this is what you're supposed to tie along with your middle time frame model, your entry strategy, I guess you could say, and then this is going to make your entry strategy even more precise. I'll show you guys a couple examples of what I am exactly looking for on the chart. So coming into the morning here, we can see we have this very dry, not too long accumulation, which we then sweep, right? But what happens, right? We leave open this bearish fair value gap. What also happens is we make a very hard expansion move downward, and this is a lot of points. It's out of open. So a lot of orders and a lot of inefficiency is going to be resting. Let's see what happens here on the RSI. We get oversold. We come down to 26 on the RSI. So that calls for rebounds, a deeper rebalance if we get oversold, leaving an efficiency above. So I'm not looking to just strictly take my entry right on the fair value gap or right on EMA. Yes, that would work in this scenario, but I'm looking for even more precision so I can get even less drawdown. Price makes a move into OTE of the range here, and this is where I'm looking to take my short position. It's also above EMA, so I know that we are overstretched. I'm then going to target whatever my take profit level is. But when we have a hard market structure, or when we have a hard initial leg of displacement, a hard move down, I'm looking to frame OTE or 0.5 with EQ of the range, or EQ of the fair value gap. I'm looking to see EMA get breached. I'm looking to see weak volume, and then I'm looking to take my entry after I see price starting to fail that level. This is going to be the golden entry. You're not going to have much drawdown if you're correct, because with an entry that is this high in the range, I'm able to play my risk a bit tighter. I'm not going to have to throw my stop loss at the high. I can drag it down. Because if price is going to run through this area, right, there's only so much more it's going to go before the whole trade would have been lost if I put my stop loss at the high. So I'm able to shrink my stop loss, and that turns this trade from a 1 to 1.8 all the way to a 1 to 4 risk to reward. That is amazing. Looking at our last example here, number 5, you're not waiting for a market structure shift. I know I spelled that wrong on the slide, but whatever. A market structure shift, this is so important, and we often look past this. A lot of people who are impatient, this is why they are losing, and they don't even understand why they're losing. Well, a market structure shift is so important for so many reasons, because what's telling you that we are going from uptrend into downtrend? Like I told you earlier with the accumulation ranges, what's going to stop us from going from manipulation to a distribution move? We have no other confirmation to use other than the fact that our market structure shift is the only thing that's going to tell us trend is changing. So I'll go into the charts and explain this further. Let's get extremely basic here. What does an uptrend look like? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, so on and so forth. What was not in the equation? What did I not say in that equation? Remember, I only said higher highs and higher lows. The only thing that I did not say was a lower low. A lower low ruins that equation. No more uptrend. There's no such thing as a lower low inside of an uptrend because it only consists of higher highs and higher lows. So this is indicating to me trend change, especially if price tapped into an area where we can expect price to manipulate. So then the trend simply changes from lower high, lower low, lower high, lower low, lower high, lower low, so on and so forth. So the market structure shift is always going to be the level that made the previous high, that made the last high. After a break and displacement, keyword, we need to see displacement past this level. The trend is then indicated change. We are not any longer inside of an uptrend. So scrolling down, what do we see here? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, right? And I'm then going to frame my last lower high, draw out my market structure shift. After a deep closure past this market structure shift, I'm then looking to take a long position on a pullback. See here, we get a fair value gap. I can now enter my long position right on this candle and target the previous high, and bang, we hit. Whatever. Point being is we need that indication of trend change. And if you're entering trades without a market structure shift, trying to trade reversals, it is very, very easy for you to go wrong. This is going to clean your win rate up a ton. So these have been the 5 things that you need to clean up in your trading. If you guys like this video, I do have a completely free community where I live stream for free. I live stream all my trades. I show off education streams. I do a bunch of different stuff inside of there. I do giveaways, anything you can really think of. So feel free to join. I'll throw the link to that in the description. If you guys enjoyed this video, please subscribe. I'm pumping out a bunch of long form content. I'm really trying to help you guys out, turn you guys into the people that you want to be, just out of the kindness of my heart. I mean, I don't really have any other reason to do it. And on top of that, if you guys wanted any help, any specific help to any scenario or situation you're in, shoot me a DM on Instagram at Nate_trades, and I will get back to you the same day. I'm answering all my DMs, helping out as many people as I can. All I ask is in favor, you either subscribe or you give me a follow. So yeah, thank you guys for watching this video, and I'll see you guys soon.